Hello guys, it's Max here from Daily Market Movements, and in front of me is the gold over the US dollar charts. Now, as you can see during today's trading session, we are trading in the red. We have fallen down towards 1814. The lows of the session we did hit 1806, but we've seemed to have bounced off those levels, and that may be due to the fact that 1806 area is where the 50 and the 200 day currently sit. So you would expect to see support around the area, and I think that we will struggle to break below it. That being said, last week we rose all the way up towards 1835, and I did say on my YouTube channel on previous videos here in the gold markets that I would not be willing to buy the gold markets unless we got a break above and a daily close above the previous swing highs, which was that 1835 area, and this is why. Okay, many of you would have, when we broke above the 50 and the 200-day EMA last week around this area here between 18 and 1820, would have been buying gold, thinking, this is it, it's going to be going up towards 1920 now. But no, that was not the case. We've now been rejected at that 1835 area. It sent us all the way back down towards 1800. Now, I am very worried for the gold bulls going into this week, and the reason being is Friday. Friday we have the non-farm payroll figure, which is going to be coming out. And why is it important? Well, of course, for non-farm payrolls is always important, but this week is even more important due to the fact we now find ourselves trading in a situation where good news is bad news and bad news is good news. And I am anticipating very good numbers coming out for this Friday's non-farm payrolls figures as the economy begins and continues to reopen more stronger every month. So if we do get a very positive reading with regards to the non-farm payroll figures on Friday, well, that's actually bad news for the markets, especially the gold market, because Jerome Powell last week said that he's really looking towards inflation and the jobs market. Now, if the jobs market improves significantly over the upcoming months, well, then he will be left with no choice but to become more hawkish and to show signs of tapering in the markets. And of course, if we start to taper the interest rates, if Jerome Powell hints at the interest rates being hiked, then that is terrible news for the gold markets, and gold markets will likely plummet. So if we do get a positive reading on Friday, that will likely send the gold markets lower. I think that could help us break below the 50 and the 200-day EMA. And if we break below the 1795 area, this is an area where we found some support last week. If we break below here and have a daily close below anywhere between 1790 and 1780, well, then I'm going to be shorting the gold markets all the way down to 1750, and I think that we could even go as low as 1680, and that is if the jobs number really is a lot better than what Wall Street is anticipating. So do be cautious this week, especially if you're a bull here in the gold markets. I wouldn't get too excited about us last week breaking above the 50 and 200-day EMA. I think it's just a technical move, and it's clear that it's already been rejected. So I would definitely be cautious, but for now I'm still favouring the downside here.